Welcome back to another video, guys. Today I am going to show you how we got the easiest 1 to 5 risk to reward trade on 500 index. I said we because I actually did share the trade signal on my free Telegram channel, whose link I will leave somewhere in the description below this video. As you can see, sometime on the 11th was when I dropped the chart breakdown of the potential buy opportunity on 500 index. And then on the 12th was when we had the entry signal to go longs. And I did drop the trade signal for this also. So yeah, very quickly, let's get right into the analysis. Starting out with the daily time frame on 500 index, what I noticed as at the time where I identified the potential trade opportunity was the fact that price had come into a key level somewhere around 850 psychological round number. Yeah, so we noticed price came into this key level around 850 psychological round number. It's a key level for me, being the fact that what we have had to see price tested the level and rejected off of the level multiple number of times. At price tested the level right here. At price tested the level here also. And then respected. Then we had the retest of the level right here. And then we had this. And this was where we had the setup for longs. At this retest was where we had the trade setup to go long. Now you can see we've had price tested this. Safe to say this is a level, guys, and not just a line. It's a zone. It's a zone. So we had price retesting this key level, key area. And as you can see, we had 1, 2, 3, 4, 5, 6. And then we had a break above the level where we tested the level 7 times. So on 7 different occasions, price has tested the level and reacted off of the level. And then we had price coming the 8th time to test the level also. And then we knew for a fact that what this level was indeed a very strong level to look out for potential buying opportunities, because for every of the times price has tested the level from beneath and above, we're about to see price react off of the level. And because we're very much above the level, as you can see, upon the retest of the level is expected to act as a support. And then what you quickly get to notice is also the fact that we are above the 50 exponential moving average. And then we're clearly seeing a weak retest of the exponential moving average, as you can see right here. And in this case, what the exponential moving average is expected to act as a dynamic support. So we have price retesting our normal supports, also in confluence with the fact that right at the very level, we are having to see the exponential moving average present, acting as a dynamic support also. 3850 psychological round number. And then also coupled with the fact that from the daily time frame, as you can see, Boom 500 index is very much in an uptrend. So you can see we very much have been printing higher highs and higher lows, higher high, higher low, and then this being the most recent swing high. And then we came back to retest what? The previous swing low. So this was merely just a pullback, a 100% retracement of the previous swing low. And then we would very much be expecting that from this level, price would continue the impulsive movement back to the upside. So here, the daily time frame, as you can see, is very much bullish. Safe to say what's looking for potential buying opportunities would be higher probability trade setups, coupled with the fact that we're already seeing some confluence at play at the very level right here. And as soon as we were able to identify some of these confluences, being the fact that what we had 3850 psychological round number, we had the level being a major key level, as price has already acted off of the level for 7 different occasions when price tested the level. So the level is indeed a major key level. And then we noticed as soon as we came right into the level, we closed the daily candlestick being a rejection candlestick, a nice daily rejection candlestick from the level. Now, guys, you know when once you get to see your rejection candlesticks at an area of interest, it puts the odds in your favor. Now, this gives you clues that indeed there's every likelihood of the level holding out. And when once you get to see these candlestick patterns on a higher time frame, like the daily time frame, now it even makes it much more better. So we add a nice daily rejection candlestick from our area of interest. Now, this is merely just a first reaction, the retest of the level. For me, this wasn't enough reason to jump in on buys just yet. And this is where I did switch down a time frame lower to the 4-hourly time frame, just to be able to get more detailed price action from the level. Coming down to the daily time frame, what I quickly noticed at the retest of the level was the fact that we had pretty much shifted from bullish market structure on the daily time, on the 4-hourly time frame rather, to a bearish market structure. So we had this being a swing high, and then a higher low right here, the higher low, higher low, and then this being the most, with this being the highest point price had gotten to. And then, as you can see, we had 4-hourly time frame in an uptrend, with this being the swing high, and then we had that shift in market structure, breaking below this higher low right here, presenting us a lower low, shifting the market structure from bearish to bullish. And then we did have more like a shift again, but then this is just one complicated market structure. And then right at this level, we had what? A confirmed structure shift, again from bullish to bearish market structure. So as you can see from this level right here, we started creating what? A lower high. This high is lower than the previous high. This high right here is also lower than the previous high. And then we had this low, lower than the previous low. So price from the 4-hourly time frame perspective started presenting us lower highs and lower lows. And then we had this. We had this lower high. And then we had this lower low that tested the daily time frame area of interest. And now, guys, in as much as we clearly had ourselves a daily time frame or rejection candlestick close, which signified that the level, which kind of gave us a clue that the level was most likely going to hold, I wasn't just convinced that it was the right time to go longs just yet. The reasons being that we had the daily time frame in an uptrend, but moving down to the 4-hourly time frame, we had different we had the 4-hourly time frame saying a different thing. The 4-hourly time frame clearly is in a downtrend. So for me, it wasn't safe just yet getting in on the buys, even though we've had the confirmation candlestick from the daily time frame. It wasn't safe just yet. And then what I'd quickly noticed was we had this level being the most recent swing low. So this is the lower low. This is the lower highs rather that led to this lower low. So for as long as we stayed below this low or high level, right, from the daily time, from the 4-hourly time frame perspective, we were still in a downtrend. And if I would want to take any buys in line with the daily time frame directional bias, I would prefer the 4-hourly time frame shifted from bearish to bullish. And now also, I'd quickly notice that right about this level, just where we had the 4-hourly most recent lower high, was more like a 4-hourly key level. Now again from B, you can see we had tested the level here. The level acted as a support. Previously, the level acted as a resistance. Then, of course, we had the level acted as a support right here. Support right here. And then we had the level acted as a resistance. A resistance. So as you can see, we've tested this level quite a number of times, and I've seen very evidently how price reacted off of the level. 1, 2, 3, 4, 5, 6. Number of times this level has been tested interchangeably and acted as a support and a resistance on different scenarios. So what I'd noticed was the fact that what we could easily come right into this level, and then because this level is a strong level, turn to start heading back to the downside again. Also coupled with the fact that what we were underneath the 4-hourly exponential moving average, very well aligning perfectly at what our area of our 4-hourly area of interest. So we could come, and then what I noticed, we could come and likely respect the level or respect the exponential moving average in this case, because we're beneath the 4-hourly exponential moving average, act as a dynamic resistance. So I wasn't willing to deal with all of this just yet, for every of the obvious reasons I've stated. We were clearly in a downtrend from the 4-hourly time frame perspective, also coupled with the fact that we were buying right into this 4-hourly key strong level. We were being underneath the 4-hourly exponential moving average and just might come into this level and then what? Fall off of the level. Now, very quickly, I noticed also from the 4-hourly time frame perspective, one of the strong, as part of my efforts or attempts to gather enough reasons as to why I felt BOM 500 index or reversal was very imminent, was the fact that I had identified now identified also when we tested the daily area of interest, the 4-hourly time frame presented us a bullish divergence, as you can see right here. So while we had the candlestick pattern giving us lower low scenario, we had the awesome oscillator indicator showing us what? A higher low scenario, which is a perfect picture of a bullish divergence. And if you followed my previous video on this, I'd said that what a divergence is a part of a confluences that tells you an imminent trend reversal. Yeah, so we add that just at the level, and this is just to stack up the confluences at this level, like I said. And then I can take this off right now. And what I did was to wait for price to come into the 4-hourly area of interest. And then I expected two things to happen at the retest of this level. I expected price to respect the level, or then break past the level, of which the latter took place right here. So we clearly had price coming to the level, and then what to break, and we had a close above the level. Not just above the level, we had a close above the previous swing high. So as soon as we had the 4-hourly candlestick close above this, we knew for a fact that what the trend had shifted on the 4-hourly time frame perspective from bearish now to bullish. So we had the trend shift. So now we have the daily time frame to the upside. We have the 4-hourly time frame to the upside. And now we have what? We have broken above the previous, we're broken above now this 4-hourly time frame area of interest, key level. And then what we are now above So if you can see very clearly, for every of the times we had the candlestick above the level acted as a support above the level acted as a support, and now we're above the level. So we're very much still expecting the level to act now as what? As a support. And then again, also very important, we clearly had broken above the 4-hourly time frame, 50 exponential moving average, as you can see right here. And now what's having seen the candlestick above the 4-hourly exponential moving average, at the retest of the exponential moving average, this is now expected to act as a dynamic support. Now you can see how this swishes back and forth. So every of the times we were below the exponential moving average, as you can see right here, when we tested the exponential moving average, we have price rejected very quickly, acting as a dynamic resistance. But this point where we tested the exponential moving average, you can see we had a rejection from the exponential moving average, acting as a dynamic resistance because we were below the exponential moving average. Now, this is a perfect example. We're above the exponential moving average. You can see our price rejected the exponential moving average. And then we acted as a dynamic support. We came a second time. We had the nice rejection from the exponential moving average. And now, guys, it's a no-brainer. As soon as we had the daily close above the 4-hourly area of interest, as soon as we had the candlestick close above the exponential moving average, and then we nicely retested not just our area of interest expected to act as a support, also we retested our 50 exponential moving average, now from the upside, very much expected to act also as a dynamic support. And now we add ourselves what a nice rejection candlestick off of our 4-hourly time frame area of interest, off of the 50 exponential moving average, coupled with the fact that we have identified from the daily time frame that what the pullback has most likely come to an end. Now, this at this point was where I felt what safe to get in on the longs. And it was only at this level I had the convictions to get in for longs. And my stop loss just below the level. Somewhere around 39.03. Yeah, I had my stop loss there. And my entry, yeah, somewhere around 39.37. And then I pretty much was targeting the price to come into the previous swing high, somewhere around 4,100 psychological round number was where I had so this was where we had our confirmation to go longs. But I take profits just at the previous daily swing highs. Yeah, and you can see how very quickly price kept buying as soon as we had our entry for longs from the level, giving us a nice 124.7 or store reward on this. So yeah, that's it, guys. I don't want to make this video any longer than it is already. Thanks for staying till the end. Don't forget to like, subscribe, share as well, and I will see you in the next video.